The DeFi sector is heating up once again, and in this video I'm going to bring you an update on Ramp DeFi, one of the protocols looking to really benefit from the rise in proof-of-stake blockchains, liquidity provision through DEXs, and the growing staking economy. This one's still a low-cap gem. It has serious potential to do very well in part 2 of this bull run, and I believe it can hit a couple of dollars in valuation, currently priced around 20 cents. So if you're keen for Ramp DeFi, slap a like on today's video, subscribe to the channel and turn those post notifications on, and let's jump in. So we can see a definite trend towards an uptick here in the market cap of DeFi protocols. We're seeing quite a lot of green across the board, which is rather nice and makes for a big change since we've had a bit of a mixed bag over the previous weeks and months, but now things are definitely heating back up again, and it's time to look at some of these lower cap gems that can perform exceptionally well during the remainder of the bull run. Yes, big money can be made in some of the higher caps, your synthetics, your sushis, etc. However, the lower down the market cap rankings and the further out on the risk curve you're willing to go can yield greater returns. So ranked at 401st on CoinGecko, Ramp DeFi with a market cap of around $68 million is certainly further out on the risk curve. However, I would suggest that this one is a very well-rounded protocol with some excellent tech behind it, plus a very smart CEO in Lawrence Lim. These guys recently had an AMA with Polygon, so they're trying to branch out really into the Polygon network amongst other chains as well. They aim to be a blockchain agnostic and try and tap into liquidity wherever it may be across the crypto landscape. So I think this one's got a very big future and a potential blue chip on the rise. You can see its previous all-time high was $1, roughly 78% from down there. It seemed to have bottomed out at around 15 cents, and now we're on the way back up slowly but surely. And since this period when it did actually peak out around that $1 level, it's actually improved its fundamentals since then. So this protocol was being built out and it kind of finalized over the last few months, somewhere around this period, but its price did not reflect the fundamentals at that time. And this, if anything, is now a stronger project even whilst the price is down. So this gives a bit of a mispricing by the market and a definite opportunity for speculation. So this was picked up by volume alerts. Unusual volume spike in Ramp USDT over on Binance, 256K's worth of Ramp trade in the last 5 minutes. You can see a massive green candle. Someone really stepped up here and bought a lot of the Ramp token around that 19 cents region, spiking it up to around 20 cents. And this move was 26 times larger than the average volume on that market. So clearly a big money player stepping in. You can see the volume profile, someone potentially knowing more than we do, or maybe some big money players just stepping back into the market here, taking their stable coins and re-entering into the altcoin space. Definitely looks bullish in general for altcoins right now. So Lawrence Lim, the CEO, had an AMA over on Polygon. We're going to go through some of the highlights here and give you a little flavor of what Ramp does. I've got plenty of previous videos on Ramp, so make sure you go and check those out, and of course subscribe to the channel. But essentially he explains everything within this AMA post, introducing Ramp and what they're about to the Polygon community. So he gives a bit about his background, previously worked at IOST and spent around 2 years there. Then he spent previously 5 years in asset management in the likes of JP Morgan, BNP and KPMG. So how did Ramp come to be then? So he says Ramp DeFi came into being when we discovered there was limited options for users to look at extracting their liquidity from digital assets that they may hold, so staked for example. So the predicament for the investor is if they see that maybe the assets are going down in value or sideways and there's other opportunities on the table, do they just exit their positions, sell up and move on? Or is there a better solution to this? So this is what led them to build Ramp, to address a gap in the market of essentially giving users a new way of extracting liquidity from those staked assets. So staked in the form of proof of stake blockchains, LP tokens, and just staked tokens. So Ramp is multi-chain in its approach, started off on Ethereum only, moved over to BSC, and now is making waves in the Polygon ecosystem. So what it allows you to do is take your staked assets and with them mint RUSD, their own native stablecoin. You use your staked assets as collateral And then with that stablecoin, you can go ahead and either generate passive yield in DeFi protocols, or maybe you'll extract some of the dollars and buy up more of the token you're already staking and stake even more to gain a leverage position, kind of putting your position on steroids. And with this multi-chain approach being on the likes of PancakeSwap, QuickSwap, Uniswap, there's a lot of options for RUSD holders to enter into different fields of DeFi. And as this multi-chain world expands and the amount of liquidity for RUSD expands, this will start to seem like a no-brainer for individuals with staked assets as this protocol develops further. So within the AMA, he goes on to explain that they've already attracted quite a bit of TVL so far. And next, they're really trying to push the TVL on Polygon and BSC in what he calls the next phase for ramp. And so core developments are taking place in early August. They're going to be supporting a larger number of assets to mint RUSD from on both Polygon and BSC. Also launching a liquidity growth program to grow RUSD liquidity in both of those ecosystems, and also engaging with more influencer marketing to grow that awareness around Ramp DeFi. He expects this growth program to significantly increase TVL for Ramp across these new chains. He goes on to cite that Polygon was selected as one of the chains to go and use because it offers high speed and low transaction fees, obviously beneficial for Ramp holders, but also they can tap into this area of the market where individuals aren't willing to spend massive amounts on gas fees. You can tap into those individuals who maybe have slightly lower budgets. He states that he believes the Polygon sidechain will actually capture most of the transaction volumes from ETH, and that the future will be an interoperable one. Goes on to further cite that both Polkadot and Solana are other chains they will tap into in the future, but at the same time, we will continue to build and enhance our platform to help crypto users maximize their capital efficiency and integrate with different DeFi protocols for the best yields possible. So you stake or add your LP token on the Ramp app, you still generate the yields as per normal, but then you can take out a collateralized loan for RUSD based on the value of your staked assets, and then you can go yield farming with those. That's how it works. I'll show you the app in a moment. And then how does the protocol actually benefit from this? Well, it's all about the buyback and burn. So everything that Ramp does centers around generating protocol revenues. The protocol revenues are then used to buy back the Ramp token from the open market and then burn it, taking it out of existence forever. And they use something they call a smart burn, which tracks Ramp's value relative to the market and aims to buy back at more optimal prices to maximize the burn effects. I.e., they're not trying to buy tops on their own token. They're trying to set in these liquidity floors or these price floors and absorbing as many tokens as possible so that they can increase the number of Ramp that actually gets burned then. Plus, we had a question down here about flash loans. This is obviously something that's plagued DeFi protocols for a while, but he says that our code prevents flash loan interactions and we have an internal keeper system to manage liquidations, so flash loans should not be a problem. So all in all, a pretty solid AMA, getting the Polygon ecosystem acquainted with Ramp DeFi and hopefully growing the overall user base of Ramp one step at a time. Along with a large list of very well-known investors, Alameda, Parafy, Arrington, just to name a few. You can see the supported blockchains are now under development for Solana and Polkadot. So each time a new blockchain is added, this means more potential users of the Ramp protocol. More users equals more protocol fees. More protocol fees means more buyback and burn. And thus this will make the tokens remaining in supply more valuable over time. So this is what I like to see, a protocol that grows with the crypto ecosystem and with interoperability becoming more prevalent. In terms of some of these burns, in May, you had 169,000 burn from the BSC side and 216,000 burn from the ETH side. They then compiled them into just one burn function in June. So in June, 513,000 Ramp bought back and burned. And then in July, 587,000 Ramp bought back and burned. So over the last 3 months, roughly 1.5 million Ramp taken out of circulation forever. The maximum possible supply, it's capped at 1 billion. So this number will only go down over the lifespan of this project. And as I mentioned, they do this in a sensible manner rather than simply buying back and burning straight away. They have something they call a pool of ready Ramp buyers. So these are created on Uniswap by setting limit orders via 1inch exchange. These limit orders essentially provide value support for ramp at key support levels to ensure value retention. So those managing this protocol are batting on the same team as you. They also want the ramp price to go up. So in July, they added a few things to the roadmap. These are all completed. Support wrapped BNB as collateral. Launch RUSD liquidity bridge between BSC and Polygon. So this means you can move the stablecoin across Binance Smart Chain to Polygon pretty much instantaneously and very cheaply. Launching RUSD staking, that is now live as well, and improving the platform UI and stability. And then this month in August, they're looking to scale up supported assets on BSC and Polygon. So they've mentioned adding a single-sided Matic pool. So essentially you could go and stake your Matic, earn rewards on that, but also unlock the RUSD token, scale up RUSD liquidity pool depth on both PancakeSwap and QuickSwap, then developing a one-click automated participation into the vaults rather than confirming numerous transactions, just one click in, one click out, increasing the RUSD utility with DeFi partners and launching new products for the RUSD usage, and then drafting governance structures and developing governance through a voting module. So this is the actual application. When I first started using it, they were just on Ethereum here. You could essentially just deposit your ramp or your ramp and ETH LP tokens, but now they've moved on. They've added Polygon support here, and they're going to be added more single asset markets such as Matic, like I just mentioned. And also on the ETH side, they are going to be adding ETH here as a single-sided asset. And then on BSC, they've got quite a few markets open: Wrapped BNB, Cake, and Ramp. So if you have any of these LP tokens or these single assets on these various chains, you can come and connect your wallet up here and then stake them with Ramp and earn Ramp in reward. So I just connected my Ramp on BSC here. I've got some staking on here already. And as you can see, those assets are staked. But if I want to, I can unlock some of the value here. So my deposit's worth around $1,500, and it's going to allow me to mint $761. So at a collateralization ratio of 200%, i.e. 50% of that deposit value, I can go ahead and actually mint that directly through this protocol, pay the small interest rates, and be aware of a liquidation ratio down here. But essentially I could free up $761 from here and then do what I want with that. Maybe I want to put it into a stablecoin DeFi protocol, earn a small yield on that, or maybe I want to go and buy up another $761 of Ramp and stick that in here as well to compound the gain. Then up on the bridge tab, this is where you can actually bridge RUSD seamlessly from BEP20 on BSC to Polygon in just one click for a small fee of $1. So this app is very easy to use and intuitive. I'm expecting them to continue to roll out more features on here, add more assets, and maybe improve the user interface a little bit. But you can see they've got the basis for a very strong protocol here. There's been no issues so far, touch wood, no hacks. And as more networks are added, your Polkadots, your Solanas, the potential for this to just keep growing and growing and growing is certainly on the cards. And everything leads back to ramp price appreciation through the buy back and burn mechanism. So I'm rather bullish on Ramp, but let me know your thoughts and feelings toward this one down below, and check out these previous videos I've done on Ramp. I do think it is a gem and one that is not widely covered by the greater crypto communities here on YouTube. So do go and check it out and see what you think. If you enjoyed the content today, make sure you like, subscribe, and ping on that bell notification, and I'll see you in the next one. Goodbye.